we are team number 10, and this is our plan to finance a pet shop importation.
Okay, well, our portfolio will consist of 4 products that are characterized by being innovative and attractive. First of all, we have the brush dryer for dogs and cats, which is a 2-in-1 product focused on saving time and room in the pet. It has soft protective bristles at the ends to clean impurities and achieve a deep brushing. It has incorporated a silent drying system which achieves an efficient and professional grooming without scaring the pet. Likewise, it's highly technological and has the option of regulating the temperature from 60 to 80 Celsius degrees. It has 2 speeds that the consumers can regulate according to their preference. And finally, it's lightweight and easy to transport. On the other hand, we have the bicycle trailer for dogs and cats, which is also a 2-in-1 product. It has a sturdy lockable hitch arm for attaching it to the bike, a directional front wheel, and a universal wheel, which allows it to be used as a buggy. It also offers safety and comfort and includes a transparent rain cover, side windows, reflective strips and reflectors on the front, left, right, and back. And well, it's ideal for going for a walk. Another of our products will be the dog and cat paw cleaner, which helps to keep the home clean by washing the pet's paws, either after walk or at any time. It also eliminates impurities and extreme dirt, like mud and stains of paint. It's easy to use to transport and is ideal for outdoor activities. In addition, it's suitable for small dogs under 15 pounds, and it's a high quality as it's made of ABS plastic and silicone bristles that are gentle on the skin. And finally, we will import a highly technological and practical electric toothbrush for dogs that will help reduce frequent visits to the vet for dental grooming.
Why did we choose these products? First, because the market is expanding due to new pet-friendly trends and the increase in the number of adoptions, friendly trends, and the increase of the number of adoptions and or purchases of domestic pets, especially dogs and cats in Peru. A market size of 34 million is expected by 2021, with a projected variation of 16.78. Second, there is an unsatisfied demand in the Peruvian market as the supply of pet care products is still limited. This represents an opportunity for our company as there is limited competition in the marketing of unique, good quality and differentiation pet products in the national market. Third, we consider continuous innovation and differentiation as key factor to ensure a successful launch and subsequent positioning of our company in the Peruvian market. Therefore, we focus on importing mainly innovative differentiation, good quality, and profitable products in the long term.
Okay, for the importation plan of the products, here we have the diagram of the process. Here in the origin of the importation in Shanghai, China, we will contact the supplier via internet and ask the amount of products that we need. The production should last between 14 and 20 days before the processing in the foreign customs. For the international transport, sea transportation has been chosen, and with the internal freight forwarder, the documentation and the delivery should last between 30 days before the entry of the Callao port, where additional costs such as time in the warehouse, the dam, customs, all of that will be charged. According to the channel determined by national customs, the product will be liberated and received for the verification and then for transportation to the headquarters of the company. Here are the characteristics of the products, including sizes, weight, and everything in detail. For the total volume, we have 12.83 cubic meters, and the total weight is 1,634.05 kilograms. Now, the logistics costs. We assume that Mafre will carry the insurance of 2% of the insured sum, customs collection of 20%, and emission rights of 3%. The insured sum being $10,481 with a taxable base of $8,667. Full value will be 7,615 with the transportation cost of an LCL freight because we are going to use a less than container load container and everything of that of $769.8 with an insurance of $209, giving a safe cost of $8,594.93. There's no ad valorem tax. The VAT or IGV in Peru will be $1,375 with a national IPM tax of 167, customs duty and collection. There will be also emission rights, handling, and all the internal transportation with a total amount of $259.91. And so all of this added will be the final total import cost DDP that will be $10,744.56.
Forfeiting. First, the forfeiter agrees with the exporter to quote in a possible operation in which the forfeiter will deduct the amount of bills or notes from the net payment for the transaction to the exporter. Then a commercial contract is agreed between the exporter and the importer. After this, the goods are shipped and the importer provides a guarantee to his bank to send the necessary documents for the transaction to the exporter, who sends them to the forfeiter and in return receive the documents. Then the forfeiter gives the money for the transactions to the exporter. With the documents received, the forfeiter goes to the bank and to collect the money, which is then paid by the importer at maturity. The documents needed to carry out these operations are copy of commercial invoices signed, copy of supplies contract or of its payment terms, letter of assignment and notifications to the guarantor, a copy of all documents pertaining to the shipment, such as certificates of receipt, bill of lading, etc., and an aval if applicable. Uh, for our bank, we have that Interbank have a discount rate of 15% and a rate of $25. Then factoring. As we know, our DDP is $10,744. And the exporter sells the goods to us that we are the importer and ships them to us. In order for the exporter to increase his working capital and eliminate risk, he assigns his invoices to a factoring organization so that he can receive the money immediately. Normally, the exporter is paid a partial part of the total value of the invoice between 70 and 80%. And the financial institution keeps the difference as profit from the transaction. The importer is charged the full amount after notifies holding of invoice of the importer. In our case, this would not apply to our company, but it will apply to our supplier, who could factor the invoice since the operation is for low values and short-term 60 to 90 payment days, obligations and amounts less than 100,000 considering our DDP. The requirements are the same, and if the exporter wanted to factor with interbanks, the fee will be to the drawer or exporter 22% at the time of disbursement, to the acceptor or the importer 24% at maturity of the invoices and 10% interest in arrears, and also a freight charge of $1. Leasing. A leasing could be used to acquire a property warehouse for our company. It works in this way. The bank purchases the asset, and then the bank disburses full payment for the asset to the seller. You can make use of the asset, but controversially, the rights to the asset belong to the bank. But I buy a piece of land under a lease and the bank pays the seller. But the right of superficies belongs to the bank. The bank gives me the right to use, but it can do whatever it wants with your asset, even if you are paying it. It's like a lease in which you pay installments to obtain the asset with interest, and the Peruvian law allows me the accelerated depreciation of the asset, which helps me to reduce income tax payments. If we wanted to do a leasing with Interbank, the following rates would apply: compensatory interest of 24%, default interest of 35%, and commission and expenses, it have a total of 4,847 minimum, plus 1% currency exchange fee and 5% prepayment fee. Then we have an ECA. It's a quasi-governmental or private institution that supports their country exports through a variety of financial products. They use public funds or a mix of private and public funds to provide loans, guarantees, and insurance to support investments abroad and exports of domestic companies. It's not applicable for our company. However, our supply may use an ACA, an ECA from your country to finance the processing of his products for export. SBLC. This is useful if we fail to pay our supplier and we apply for an SBLC from a trusted bank where we have a good credit standing. The bank give us this, and this is also known as the payment of last resort. Having an SBLC help us in terms of business, both on the national and international platform, as it means that we have a good financial history with the bank and the bank trusts us. These trusts help us to stretch our business to a great level. Then we have a supply chain financing. Our company purchases goods from the seller or our supplier. Under traditional circumstances, the supplier ships the goods, then submits an invoice to our company, which approves the payment on standard credit terms of 30 days. But if our supplier is in dire need of cash, it may request immediate payment at a discount from our company affiliated financial institution. If it's granted, that financial institution issues payment to our supplier and in turn extends the payment period for our company for a traditional or for an additional for 30 days for a total credit term of 60 days rather than 30 days mandated by our supplier. This works best when the buyer has a better credit rating than the seller and can consequently source capital from a bank or another financial provided at a lower cost. This advantage lets buyers negotiate better terms for the seller, such as extended payment schedules. Meanwhile, the seller can unload its products more quickly to receive immediate payment for the intermediary financing body. Structured financing. For this operation, I go to the bank and ask for a loan to be able to buy the goods. The bank gives me the money directly to me, and I pay the installments to the bank with interest for this loan. But I must leave a guarantee and or an asset that justifies the loan. The collateral can be a flow trust, that is when the money I receive goes to a trust account. All the money I get paid goes to the trust accounts, and this includes the free use of money and its installments. Two, movable or immovable collateral, and three, comfort letter, that this is an obligation of the shareholders of the company toward the bank, where the shareholders agree to repay the debt in case the company is unable to repay the debt. And then we have commodity financing. This does not apply for our case, since our product is not a commodity, but our supplier may require a commodity to produce the goods to be sold. The financing of a commodity is done through forwards. This means that our seller negotiates with his raw material supplier. In this case, it can be metal to apply a fixed price for that good today to be delivered to him in the future. the future price is brought to present value. This is useful for our supplier because secure the price of commodities that become overvalued over the time to due to various factors like weather and have more solvency over time. Long-term financing. In the long term, when we become a large company, bonds could be used as a method of financing. It works by going to the capital market and applying for a bond. This money is given directly to the company, but the longevity of the debt service is longer, so the interest rates are lower, between 2 or 3.5%. Bonds have bullet installments. This is principal part of the entire debt that it's paid in the last installment of the debt service. For example, if the bullet installment is 100%, only annual interest is paid until the last year when the entire borrowed debt is repaid. All bonds have bullet installments. Then we have the aval, that it is a type of comfort letter in which someone agrees to pay the company debt if the company is unable to do it. A guarantor will usually be a document that the bank will ask the company to provide when signing a credit or loan agreement, and it is commonly used in mortgages. To whom the debt is the warranty document can be awarded. It can be from the company itself, a shareholder, a third party, or any person.
For the additional financing method, we had chosen the letter of credit because of the many benefits that we could take advantage of, such as the security over the goods and also the trust in payment to the supplier. The process starts with the contract of sale between our company and the supplier after the arrangements. We should carry the documentation and letter of credit application to the issuing bank, in this case, Interbank. This bank will issue the letter of credit with the ICBC in China, which will advise the confirmed letter of credit with the beneficiary to deliver the goods that we previously negotiated to obtain the bill of lading. With this document and some others, the supplier will receive payment in exchange of the documentation that will be handled to us after debiting the amount stated in the contract for the products and a fee for the banks. With the bill of lading, we could receive the goods when this arrive. The amount to ask for the letter of credit will be 10,744.56 US dollars. The LC will be issued by the Interbank, so these are the commissions of issuing and negotiation for a total amount of $692.34, which will be paid at site. The requirements for this type of financing in the Interbank are an import letter of credit issuance request, which is right here on the screen. This is the empty issuance request. We will need to fill the data that we are going to ask, and which also a promissory note and a promissory note filling agreement in case that we don't have a macro contract with the bank, which we don't have actually. Also, checkings or savings account and a line of credit with the Interbank. All of these are required to issue the process of the issuance of the letter of credit.
Okay. Well, now to the comparison of the instruments. First, we have forfeiting, which wouldn't apply since the transactions must be over $100,000. And in our case, it's almost $11,000. Well, this instrument protects against credit risk, transfer risk, and the exchange rate risk. It also gives cash flow immediately to the seller and is flexible since forfeiter can customize the offering according to the requirements of the seller of the capital goods. It's disadvantages are that it's very expensive and not all transactions can benefit from this instrument. Next, we have for factoring, which also doesn't apply in our case. This instrument protects from bad debts, gives you useful information about the credit standing of your customers, among others. And its disadvantages are, for example, that it will restrict funding, reduce the profit margin, and the scope for other borrowing. Another instrument is leasing, which applies under special assumptions like the acquisition of a property or warehouse for products. It allows us to access to a higher standard of equipment, which might be too expensive for you to buy outright. You pay for the asset over the fixed period of time that you use it, which helps you budget for a future. The leasing company carries the risk if the equipment breaks down. And its main disadvantages are, for example, that you might have to put down a deposit or make some payments in advance, and it can work out to be more expensive than if you buy the assets outright. Next, we have the ECA, which wouldn't apply since this is an import operation, and the benefits that this instrument gives are for exporters. It's ideal for exporters because it supports exporters in terms of insurance, financing, and guarantees, but its disadvantages are that the rules governing specific countries can be very restrictive. Then we have the SPLC, which doesn't apply because it's more oriented to large scale and long-term projects. It's governed by international laws that unify interpretations. One of its disadvantages is that companies must have former commercial record, and it doesn't offer a guarantee of quality or quantity of goods. Okay, now we have, for example, the supply chain finance, which applies to our case since it allows us to have a stronger buyer-supplier relationship and an increased liquidity. It's also beneficial for us because here it's the supplier who is charged for its for the early payment. Its main disadvantage is that it only applies for solvent clients, and you need to have an endorsement line for international import. Another instrument that applies are futures, since our purpose is to reduce the risk of changes in future prices, but we have to take into account that it applies for only available assets. The aval also applies since we have access to an aval that can support the loan. It will allow us to have lower payment risk, to have solvency and credibility, and to respond to obligations contracted without the need to commit funds. And finally, its main disadvantage is that not everyone have access to an aval. And finally, the long-term financing doesn't apply in our case since it's more for big amounts of money. And that way, it allows you to put projects with large investments, but they also have higher interest rates.
Well, my name is Luz. I'm going to talk about the use of derivative financing instruments. Well, we have in this opportunity future, it refers to agreement between two parts that negotiate the purchase or sale of assets and a specific future date and price. This is a common for difference, and in other words, the loss of one of the parts are the gains of the other. Here, we have assumed that we have made a future contract in the face of the increase in the dollar in the last year in order to avoid future risk of a possible risk in the dollar. In the next slide, we have looked to synthetic forward and forward. Here I have to put together and compare. Basically, it's a long-term agreement in which two parties buy and sell an asset. And this contract establishes all the terms such as price, date, and place. The difference, the future contract forward doesn't conform to the standard of given markets and benefit from the attributes. In this case, we assume that when we import, we have to pay our suppliers in dollar. However, we earn in soles. So we make a forward contract, fixed price is established in dollars. So If it rises in the common months, it will not affect us. Also, we have option contracts. It refers to a preparatory agreement between two parties for the purchase and sale of an asset. In this, the seller gives you the right to decide if you want to take a sale offer or no, but it's no obligation. So if we assume it that if we want to use this instrument, we will evaluate what is the best option. So you can use call option or put option. No, if the price were to increase, we will choose the price established in the contract. But if we went down, we will decline the offer. Finally, we have a swap contract. It refers a financing exchange where they agree to pay a series of forward and certain times. As a benefit, there is a protection of interest rates and reduced risk. However, in this case, we have to import, so we have not going to apply of this. Also, we have green financing. We have to point to a green bond. However, it's important to say that our product is not eco-friendly, so we can't apply for the financing. Also, if we want to take this financing in the future, the project will about the sustainable infrastructure, in which will we have two sustainable warehouse, no, where we will optimize energy and space consumption.
Okay, the most important fintech that the company could use are three. Innova Finding is one of them, which is a Peruvian fintech with which we can obtain immediate liquidity without debts, without cumbersome procedures, and with lower discount rates compared to other alternatives. In addition, it includes additional services such as commercial advice and information on the solvency of its clients, which can fit into any type of business. Next, we have Rexty and Cambista. They are currency exchange houses which facilitate the purchase and sale of soles in dollars online and safely, with the best exchange rate today that is evidenced by a better price of the dollar compared to the exchangers and financial institutions market. Finally, there is PayU, which we can use for physical and online payments in order to cash our consumers digitally.
For the financial risk, we identified three main risks that could create obstacles in the process: the exchange rate risk, the interest rate risk, and the supplier performance risk. For the first one, this is based on the fluctuations over the exchange rate for the USD-PN pair due to political juncture. This is causing inflation for the Peruvian sol that is constantly losing value, so we don't recommend to have a debt in dollars. Then the interest rate risk is the potential change on the percentage of the rates given by the financial institutions. This could grow the dividend of the company, and it is almost unpredictable. And the most important, the supplier performance risk. It is a risk that the supplier of the product could not get the delivery of the goods on time, complete, and with accuracy, or without any damage over the goods, which could make this lose their value or even interest for some clients because of the defaults on time. The suggestions to mitigate them are the use of many financial tools, such as the forwards or futures contracts, to establish a price for the dollar in the future, avoiding the exchange rate risks and fluctuation. Also, the management of the forward range arrangements with the bank to control the interest rate risk and pay the same in case the interest rate grows or if it decreases. And for the supplier risk, we recommend the issue of the letter of credit or even the bill of exchange, where the supplier must present documentation before receiving payment over the products.
Okay, about the most challenge in this project is to make our business sustainable in the long term because the market is constantly growing and there is a risk of to entry for new competitors. Also, another change has been to locate the best supplier in Alibaba that give us the confidence and security with a competitive price. Also, the search and comparison of different finance incentives that offer us the best financing option.
For the conclusions, in order for us to apply for most of the forms of financing previously seen, we must be a large company. So for our case, the best type of financing will be a supply chain financing, as it is focused on importer. Also, logistics process could be very challenging, and if we don't have any customs agent. Also, it is very expensive to estimate every part in the delivery. It is necessary to pay attention to detail. There are many Peruvian fintechs that can help have us better business profitability and reduce financial risk. And it is observed that marketing products for pets will be profitable for business for us, since the market is constantly expanding due to new pet-friendly trends and increase of pet adoptions. And for the recommendation, if possible, financing the import with a supply chain finance, because this will have reduced risk to our supplier and ensure that he is satisfied, as well as giving us more time to pay as a small business. Another alternative for the financing could be the use of letter of credit to mitigate any supplier risk and have certainty of the delivery of products. Also, we should take into account that financial and digital fintechs in Peru, in order to reduce this risk, to generate greater profitability. Also, it is recommended to innovate and expand the portfolio of products that solve problems, since our products could become obsolete in the short term. Thank you.